Someone could ask, well, so if the government can print unlimited amounts of money out of thin air, why did they collect taxes?
Okay, the XRP community didn't get to say, God, if only the SEC was a little nicer to us over the last 5 years.
If we really want to break through and we stop talking about millions, billions, but actually trillions.
What everyone calls real-world assets. I would forget real-world assets. Just look at the derivative market. It's 1.2 quadrillion.
And also pushing a Bitcoin treasury company, I'm skeptical of. I'm not making an accusation.
They try to shake me out, but I was born ready. Dropping down the price, then I be getting plenty. They want all your bags, and they want all them empty.
The government can print unlimited amounts of money out of thin air. Why do they collect taxes? Also, get ready for a blow off top. But first, we got digital asset investor Charles Hawkinson gives props to the XRP community. Welcome back to some more Moon O'Clock News, good glitches. And as always, nothing in this video is financial or investment advice. Always do your own research. Let's get into this extra bullishness.
Okay, the XRP community didn't get to say, God, if only the SEC was a little nicer to us over the last 5 years. They had to deal with it as an ecosystem, and they spent hundreds of millions of dollars, and they took the worst of all of it for all of us, with the possible exception of Binance and a few others. Holy moly. And now we're on the other side. And we're working hard. We survived. The industry survived. We're still in the game.
XIF Crypto, former central banker and regulator Maurice, says that the XRP ledger is laying the foundation for trillions in institutional opportunity. The future of finance is being built on real utility, not speculation.
As an ex-regulator, I can testify this is the only regulated way if we really want to break through and we stop talking about millions, billions, but actually trillions, because the opportunity in front of us is in trillions. My name is Marius Jurgilas. I'm the co-founder and CEO of Axiology, and Axiology is digital assets infrastructure, which is cutting across multiple layers of the pipes that are running the capital market, and we are compressing it into one layer on XRPL. Imagine yourself trying to get to buy your government bonds. Ultimately, maybe directly from the government, because right now the way we interact with financial market is through broker-dealers, multiple intermediaries. Imagine we can compress all of that into one very efficient infrastructure. That is what XRPL Ledger allows us to do if we do it in a compliant way. Axiology is leveraging the distributed ledger nature of XRPL, which is cutting across multiple layers, which is needed in financial market. In our conversations with partners and potential customers, we see that there's still this gap of understanding, or like this shade of fog. You say tokenized assets, and people say, for example, the token swap. It's super basic, and people say like, well, what's the value of it? It's a very basic functionality where sometimes I just know I need to send money from this wallet to that wallet, from me to you. Either we have to really invest more in educating decision makers who are making decisions that, look, it's just another ledger, it's a database. You can have it in this type of a form or this particular form, which enables you to do 1, 2, 3, 4, 5. You can have efficiencies, you can share information in controllable fashion. And otherwise, it's just normal business, issuing, trading, making investments, settling, moving value across jurisdictions in a compliant way. The funding gap for the SMEs in the jurisdiction which I'm coming from, European Union, is 5 trillion. 5 trillion is how much small and medium enterprises are looking for funding. And at the same time, we have 15 trillion in deposits, dry powder, which is right now in the banking system. Institutional grade infrastructure is the one which is making sure that investors are protected. Institutions who are involved in this, they can control the risks in such a way that managers, compliance officers, they feel comfortable. So it's not only about the technical feasibilities of the blockchain, but actually being able to comply with the very normal requirements of privacy, controllability, cybersecurity. I've spoken to quite a few very important players in the market, and the message is very clear. It's not the technological immaturity. What everyone is looking for, scalable opportunities that are actually solving capital market problems that we face.
I've asked it. Your wishes have been granted. You asked for crypto to be released from the dungeon. It's free for global adoption. Phase 2 crypto adoption is upon us.
Is that true? Does that apply to the rulemaking process that you guys would have to go through? Are you aware of that order?
Yeah, so the goal is deregulation. The goal is kind of making the United States the crypto capital of the world and also the best place to do business in the world. And part of what adds burden to operating a business or engaging in commerce, right, are these regulations. And sometimes they're very duplicative. Sometimes they're unnecessary. I mean, I think our chairman most recently, talking about a form PF, mentioned that, we should have the minimum amount of disclosures necessary. You shouldn't be imposing additional burdens where it's not needed. And so we're certainly taking a hard look in line with the president's directive to make sure that all of our regulations are what's necessary, no more than what's necessary. And I think that's really the idea. There are some administrative requirements due to this executive order around deregulatory versus regulatory, and that's something that the commission must consider when it issues new rules and kind of what it can take off the table.
Mr. Man, XRP, November to December, the Santa Claus rally is coming. Get ready for the blow off top, Goldman Sachs.
Our institutional client base is certainly positioned for a year-end rally, or in trading speak, a blow-off top, which effectively means that a lot of people are warming up to the idea that we might have this parabolic move higher over the next couple of months. The one thing that I would note about year-end positioning is that our institutional clients are very, very grossed up in terms of risk. And so effectively what that means is if you take the absolute value of clients' longs positions plus the absolute value of their short position, that number is at a 5-year high. Our clients love AI and they love derivatives of AI. So think semiconductors, think AI power companies. But as they continue to buy these companies, as they break out to all-time highs, they're selling other sectors against it. That's why the net positioning is only maybe a 7 out of 10. The sectors they're selling a lot are energy, healthcare, and anything related to the consumer or the economy. Think retailers, think restaurants. And so effectively you have this setup where everyone thinks the market's going to go higher, but I think the real pain trade for a lot of our clients is that if the market goes higher, but it's not led by AI and the AI complex, rather if it's led by other sectors of the market.
Another one from Mr. Man, XRP. Most people think of real world assets in trillions, but regulators much prefer to think of it as in quadrillions.
But the main thing I would like to really ask you to focus on is not the crypto word. And the reason for that is, as some of you know, I call it a rounding error. It's about 4 trillion. And actually the much bigger opportunity, and I think a much bigger opportunity for Merkle and Riggs, we were talking about it earlier on, is actually what everyone calls real world assets. I would forget real world assets, just look at the derivatives market. It's 1.2 quadrillion. And we've got a few Americans in the offing, so I can't resist it. If you're American, put your hand up, please. Right, how many zeros in a quadrillion? How many zeros asked? 12? 18? So you can't even agree amongst yourselves. We think it's 24. Now, the reason I mention that is we used to argue about trillions and billions, but it's a lot of noughts. And so when we talk about 4 trillion as opposed to 1.2 quadrillion, and then stick in the funds and the bonds and real estate, and I'm just going to completely ignore data and information, talking to Shell what they're doing in Amsterdam, just staggering how they're using the technology. But the biggest tokenizer in the world is which company, before I start the panel? Nope. You all have one in your wallet or your purse or your phone, I suspect. Visa. Everything you do, they're tokenized. So this isn't new technology, but we are going to have to learn how to control and manage our exposure to this. And that's what, obviously, Merkle, and that's the whole object of today, is to start thinking and taking, unfortunately, responsibility.
Subject views, gold is currency, Ray, Delio.
It's likely that those deficits will then produce lots of bond sales, which will compound it. When you get into the point in the cycle where debt is needed to pay debt and compounds, it becomes a problem. It becomes a problem also for the central banks, because the central banks, by the way, this is not just an American problem, this is a world problem. The central banks themselves own the debt. And so, and they lose money on the debt. And so when they're losing money on the debt and they have asset liability problems, then they also not only have to monetize essentially the government's debt, but they also have to monetize theirs. And those are the characteristics that produce a deterioration in the monetary order. And that's why what you're seeing. You're seeing a dynamic of why countries, for example, are letting their reserves or their assets in bonds and so on go down, and they're acquiring and have been acquiring gold, for example. So gold is a currency. We think of currencies as being the major fiat currency, but gold is a currency. It's the second largest reserve currency.
Meanwhile, Bitcoin Archive, if the government can print unlimited amounts of money out of thin air, then why do they collect taxes?
Someone could ask, well, so if the government can print unlimited amounts of money out of thin air, why do they collect taxes? I mean, in theory, it would make sense, right? If they can print unlimited amounts of money, why would they need taxes for? The answer is simple, but it's very shocking. The real problem is that you pay high taxes only to uphold the illusion that you are funding the government, which you are not. It's shocking, but it's true. The government is funded by money printing, paper backed with paper, a bubble that will inevitably burst. The situation is even worse than it seems, because if most Americans and the rest of the world were to become aware of this farce, confidence in your currency would be lost, the dollar would fall, and the Western civilization with it.
Digital asset investors look on their faces as they realize that Bitcoin libertarian dream just went up in Wall Street smoke. It's priceless.
I think, Bitcoin and self-custody is the thing. And anybody that is a core developer or part of core and also pushing a Bitcoin treasury company, I'm skeptical of. I'm not making an accusation because it's not even about character. You could be forced into an Epstein, a BlackRock, a Blockstream, an AXA, like a Cantor Fitzgerald. This is the mafia you're getting into bed with. Jack Mallers, you are in bed with the mafia. Like, you are in bed with mafia players. Charlie Kirk tried to exit the mafia. You don't exit the mafia once you're in bed with the mafia. And this is the mafia, the Cantor Fitzgeralds, the proof of weapons network. So once you're there, you're there. So would it surprise me if BlackRock wanted to get as much Bitcoin in ETFs, become shareholders in as many Bitcoin treasury companies, fund as much of the developers and compromise as many of the developers as possible, take as many mining companies public and become the main shareholder in those public Bitcoin mining companies. The biggest threat to Bitcoin right now is the US, because the proof of weapons network is hosted in the US, and the US is getting more mining, more public companies, more ETFs, more treasury companies, and they have developers. That is a big concern for me. And so if somebody is going to create a competing implementation whereby approximately 20% of node operators are running an alternative implementation, I encourage that because I think we might need it one day.
With that being said, good glitches. Appreciate you stopping by. Tuning in for another Moon O'Clock news update. Shout out to the latest sub. Make sure to smash them likies and drop an elbow from the top ropes on them subscribies. Check the links in the description. We'll see you at the tippy top. Later, glitches.
Later, glitches.
Cause crypto. I got the formula, stack them bags up and simple, and wait until we explode. I'll meet you at the disco. We just getting started like an intro. 589 the numbers, please, please call our bingo.